All right, all right. We're live. We're live. It's 1:03 p.m. Wednesday, the 31st of January. We've got Fed coming up. Turning off the volume on my computer. Hang on. All right, we appear to be live and ready to go here. So I still do have COVID and pink eye, so I can hardly see out of my right eye, but that's not going to stop us today. I did just one little, not really a scalp. I was looking for a support order. I didn't trade much today because I don't trade on FOMC day before the news announcement. But earlier in the day, when I was doing some other work on the computer, I was watching ES, and we had a temporary support level here at about 49.16 right in here. So I just went ahead and took a little scalp against the trend there. I thought there was a possibility we could have held that level. But I could see, so it didn't intend to be a scalp. I don't scalp on purpose. But I made, I don't know, 3 points, 150, 160 bucks per account. See that here? Yeah, so that's here. Here you can see up about 160. I had one other little trade that was kind of, I don't know if it was, I don't know, I must have made just over 3 points. Can't remember, doesn't matter. Either way, these are the challenge accounts that we started just the other day. So one of them is at 52 grand almost. The other ones are up a couple $100 here so far. So, or no, I guess we're up 150 bucks. Yeah, here. So anyways, you guys get the gist. So we're going to continue to work our way through these challenges. And, you know, today with the Fed day, just got to exercise caution as always. When I was looking at the markets earlier, you know, I noticed bonds were firing to the upside. So we've got some interesting things heading into the Fed here. We've got a dollar that's still pretty strong right now. You can see that we're still, the euro did, get stronger earlier in the day, but now the dollar is kind of, so we're stuck in this range. Look, this is I'm really sick, guys, so bear with me, but we're going to trade this together. I got to lay the foundation here. I just don't have a lot of energy. It's 8 o'clock at night here in Sweden. I got COVID and pink eye, but, we got to see if there's a good trade for the Fed. So just bear with me in my low energy levels. I appreciate it. All right, so you can see Euro US futures here, right? This is the Euro futures. We're just stuck, right? Like the dollar's not getting that much stronger. The euro's not getting stronger. This particular pattern where we're going to close today, I mean, really, it's anybody's guess. Is the Fed going to spike it up or spike it down? I've got my ideas, and I'll tell you my ideas in a moment. But just so we start off, there's no real clear indication from, the dollar, other than the dollar's been pretty strong as of late. But today, we don't really have a particular read on the dollar. It's just choppy, right? Okay, so that's the dollar. But what happens when we look at bonds? Let's look at the 10-year. And I got the webcam off, guys, too, because you don't need to see my swollen right eye with my pink eye, my COVID. It's too late here anyways. All right, so here's the 10-year. Now, what we can see with the 10-year, this is really interesting, you guys. Like, really interesting. Because here's the weekly chart of the 10-year, right? We are at a super key strong level of resistance here on the 10-year right now, and on the daily as well. So we're gonna have to keep a very close eye on this 112.17, 112.18, just this general area here for the 10-year Treasury note. Looks like it's very strong resistance, and you can already see that the 10-year has already spiked up here on the 4 hours. So this is kind of an exhaust up into all that daily, weekly resistance. So, I wouldn't be surprised. I'm going to be looking probably to short the bonds on a pop at a key level. That's my first idea for the Fed. And the reason is because the OMA levels that we're at, I think we could be setting up a fantastic opportunity to get short some bonds and make some money here after Mr. Jerome starts speaking and starts to move these markets. So right now we're just preparing for that. So the 10-year Treasury, we've got an enormous enormous amount of resistance here on OMA. And usually when you have these confluence of levels on OMA, you know, they work. So we're going to, you know, the odds of the 10-year treasury just, you know, spiking up and through that are very, very low. So we have a good probability trade out of the resistance to the short side back down, right? That's what we're going to be looking for. And then if we were going to trade that on the bonds, what will we trade it on? We trade it on the ultra bond. On the ultra bond, yeah, you have a lot of resistance here, you guys, a lot. So I would be looking, you know, up into this 129.30 level for sure. Let me just get the exact level here for you. Yeah, 129.25, just anywhere up in here. You're going to have a lot of resistance. So just start kind of projecting out your extensions. You know, a little pop-up there gives you a very low risk opportunity to short for a move back down in the range like that. And, you know, on the ultra bonds, you know, if you catch that from 129, you know, 30 back down to 129.12, you know, that's a nice move per contract, $600 per contract, depending how many you go. So that's what I'm going to be looking for. We also have the monthly volume weighted average price backing us up from last month. It's not this month's VWAP, it's last month's VWAP, December's, at 133 up here, 130 and 30 seconds, basically right here at that extension. So that's a key level right here for the ultra bonds. Very key resistance level that I'm going to be maybe looking to short into, pending, because you've got weekly resistance, monthly VWAP from December there, you've got an exhaust on the 4-hour chart, and this could be it. You know, sell the news, right? Like everybody's maybe expecting Powell to be super dovish. Maybe that's why bonds have rallied. You can see the daily chart. The ultra bonds have, you know, rallied like crazy. But maybe this is now sell the news, right? Maybe Powell is going to, even though all the other FOMC voting members have been pretty hawkish heading into this announcement, and then therefore typically Powell's been the opposite. So in that case, he would be dovish. But you never know what he's going to do. He might just come out and be, you know, hawkish. And the charts are saying that he, you know, bonds are saying he has a chance of being hawkish. So an eye on that. Now let's look at the, not really going to trade the metals during the FOMC. We're going to trade bonds or, you know, ES or something. So those are what we're going to focus on. But we want to see what gold is doing. Yeah, so I think gold is, you can already see, you know, gold and bonds will move the same. You see how gold is already coming down out of its daily resistance level here? Similar pattern to bonds. Here you can see the 4-hour exhaust here on gold, right? Ramped up. So if gold is already heading down, you know, that's looking good for our thesis to maybe want to short bonds. And again, the 10-year as well, it's a little thicker. When Powell's speaking, things can get really crazy. So the 10-year is just a little less crazy. And we do have more confluence. Probably we trade the 10-year. If you trade the 10-year, you just need to go, you know, a few more contracts, right? So I like the 10-year when Powell's speaking because it stays nice and, right, and Powell's going to start speaking in about 15 minutes. Let's go ahead and bring up the 10-year here. All right, so we got the 10-year here. And let's look at silver. So gold looking to head lower. Oh, look at silver, you guys. Already leading this. This is fantastic. You got gold heading down. Silver heading down like it's nobody's business already. This is great. That means the top is probably in for silver now on this recent correction we've seen from 22 up to 23.40. So that means bonds are probably hitting their top too. They're going to resume lower. Rates go higher. Dollar will probably get stronger. Everything we're seeing right now heading into the announcement is a hawkish owl. Hey, we're going to leave rates higher for longer. Don't get too excited. That's what we're seeing heading into the announcement on the charts, right? So let's look at We don't need to look at copper and platinum right now. Let's look at ES and NQ. You can already see they're heading lower to start the day. It's almost as if some big money has some advance notice or something, because they've been in a trend run all day long, the downside. That's interesting. Now the question is, basically, here's the question. If Powell's hawkish and stocks, stocks are already heading lower, right? And bonds look like they're peaking out into resistance level, going to head lower, rates go higher, right? So if Powell is going to be hawkish and stocks are at these lows of the day or thereabouts, we have two choices for the announcement. We can either short stocks on a pop, or we can short the bonds. I would tend to probably play the bonds because they move a lot more smoothly, especially when Powell's speaking. They're still crazy, but the 10-year is not going to be nearly as crazy as the NASDAQ or the ES. And when you're dealing with these prop firms like we're trying to, work with right now, you got to really be aware of that trailing draw, right? So it's better if you have a choice to trade an instrument that's less likely, to go haywire and, be plus minus, thousands of dollars. Better to trade an instrument that kind of picks a direction and goes, and bonds do that much better than stocks. So for that reason, I would be willing to play bonds. So after all this, what I'm going to be looking at here for the announcement is I think that we're going to play the 10-year treasury, because number one, you got to realize these announcements are, when Powell speaks, it is extremely volatile. So you want the thickest market. So you see how here on Quant Tower, we've still got 1,500 contracts to be traded on the bid, 3,000 on the offer. Sure, when Powell starts speaking, that's going to thin out, but it's not going to thin out as low as anything else at all, or anything even close to that. So it'll stay decently thick, right? So it just gives you more control over your trades when Powell's speaking. So that's why I like the 10-year. And if we get in on a good trade, the 10-year has the propensity to just kind of hold its levels a little better. And then once it starts going in your direction, it kind of, if it pulls back against you, it doesn't typically pull back against you, by crazy amounts like big retracements. That doesn't really happen. So for those reasons, we're going to trade the 10-year. And with the 10-year, when I bring up these charts here, using OMA, what we've got here, I'm going to bring this to your attention because it's so important again. So this is the weekly chart here. You've got so much resistance now into this 112, right where we're at right now, right? You got a ton of weekly resistance here, tons. Okay. Then we want to ask ourselves, do we have daily resistance too? Yes. This is looking like an exhaust on the daily chart. Look at this volume down here coming in. Boom. See how it's increasing, right? So to me, this looks like an exhaust up here. Look at the volume profile composite over here. You're starting to get into this low volume rejection area. I think ultimately we're going to want to move back down to this previously accepted price. I think we're getting too far away from acceptance now, right? So that's why I look at the weekly OMA resistance, look at the daily OMA resistance. And when you look at the monthly volume profile and the monthly value areas, we're right up at the monthly value area high, which is a great place to get short if you've got other reasons to do so. So now you've got all the OMA key levels, types of trading, all the patterns, all that stuff I teach, all that's matching up for resistance here on the 10-year treasury, okay? Now, if we look at the 4-hour chart, we say, okay, if this is the 4-hour here, right? So you've got the 4-hour chart right here. Now, what we have to ask ourselves, let's just imagine, right? We got that weekly resistance coming across here, and we got that daily resistance coming across here, right? And we got that volume profile stuff, the composite low volume coming across here. So all that red right there is a lot of resistance, right? So in order for price to get up and through that, it's going to be very difficult. And we have to ask ourselves, how did we get there? Well, look, when you go from here straight to there, generally speaking, that's either a very powerful breakout or it's an exhaust for a reversal back down. More often than not, it's for a reversal back down, and it sucks in the momentum people who are chasing the breakout. That's the majority of the time. And then when we look at where we are on these higher time period charts, you could just think about all this downward pressure on price here on the 10-year. Then we look at the hourly chart here, right? Here's the hourly chart. So here you can see we already had, hourly breaking out early this morning. Big push up here around 9-10 o'clock, right? And then since then, basically just making lower highs, consolidating, going into the range. So I would expect this hourly resistance level at the 4-hourly resistance level, at all that higher time period, weekly, daily resistance. I would expect that to be strong, for a move. Hard to say, but we could see a move back down. If you short the 10-year, the play that I would say, what I would be looking for is I would be looking for, like right here, basically, you just got a beautiful extension right here, right into these highs. So I'd be looking for a challenge of these highs at that extension. And if I saw some selling coming in there, then that's where I'd want to short. Because I have look, if I short here and I'm wrong, right? Because anything can happen, right? You can be wrong. You can lose trades. That happens. Thankfully, not as often on this channel as some of the other ones I watch. But we do have losers, so I'm not going to say we don't have losers. That would be retarded. We have losers, obviously. But what we try and do is keep the losers small by picking key levels and waiting for those levels. And then, all the other stuff we use, OMA, volume profile, all that good stuff. So if you pick this level here and you're right, it can go down to here. So if you look at the size of that, and if you're wrong, your stop is going to be probably just here. So you see how you can fit 3 or 4 of these boxes for your stop into the target box? Well, that's the R factor you want, right? That's what you want. You don't know how far it's going to go, but that's what you want. So that's what I'm going to be looking for. And again, this is not just about what we're seeing on the 10-year because we're using the asset correlations, right? So you can already see that gold is coming off of its own 4-hour exhaust. See how gold is going to give you a similar pattern to bonds? And see how gold exhausted up right here? And we're already heading down. Okay, and then we have silver usually will lead on the reversals anyway, because silver, a lot of the selling pressure will hit silver first, always. So here you can see, look at the silver 4-hour exhaust. We're already way down here. So this is fantastic news if we want to short bonds, seeing the metals lead the way to the downside. Okay, so and if that's the case, and if Powell is going to be hawkish, then when we look at the dollar, what we'd see here on the dollar is that, here's the euro against the dollar. You're also exhausted. Euro got stronger here, but now the dollar's clawing back. So if Powell's going to be hawkish, which the charts are looking like he is, this dollar will keep dropping and getting stronger against the euro, right? Because when this go down, the dollar's getting stronger, okay? So dollar strength, gold and silver down, bonds down, rates up, hawkish Fed. So that's what we're looking for right now, and that's what we're going to wait for. So if you have any questions, let me know. If you want to trade another asset class, if you want to trade, yes or whatever during Powell, that's great. And if you have a question about if you put a gun to my head and said, Andy, you have to trade ES, what would you do? If you have questions like that, I'm happy to entertain them. I'm just giving you my trading plan for the announcement coming up. It's great. Hey, Steve, how you doing? Did you catch all that? I'm pretty sick, as you can hear. Medicine I think maybe my medicine is working, but I think it's just making me sicker first. It's like it's like causing the, I have the Swedish word in my head, utrensning, like the cleansing, cleaning everything out. We should just do the whole stream in Swedish. We'll get some of our Swedish viewers. You guys got any Swedish friends? Let them know. They can come to the stream, and I'll stream in Swedish for all of us. That'll be fun. All right, so that's our game plan. I'm going to look to be shorting the 10-year Treasury, and so if we look at a similar situation like this, if I can, this is called. Now we have our game plan. Now, what is scenario analysis? Yeah, I'm way more chill because it's 8 o'clock at night here and I'm super sick. So the coffee is worn off. I'm ready for bed. I got flaming pink eye in the right eye. I look like a cyborg. My right eye is so inflamed. Oh gosh. But that's all right. We're not going to stop it from letting us kick ass when Powell speaks. So basically, we'd be looking for. I'm just looking for something similar here. You know, kind of something like this. Like this is kind of what can happen on these announcements, right? You open the announcement down here. You know you like a resistance level up here. Kind of just set your order up there. During the announcement, it goes up, fills it, closes back down, and then when that hourly bar closes, you can get that continuation like that. That's kind of, you know, that's the idea of what I'm looking for. Now, Powell might come out and just totally surprise us. You know, that's fine. Here's a good one. This is a really good example. So you see here how you're heading higher, you move into congestion on the hourly, and then there's your pop, and boom, there's your drop. I'm looking for something like this today, almost identical to this. So you can see here, you know, big move up on the hourly, there's your drop. Now I'd want to pop, short, and head down. That's what we're going to be looking for today. Steve, let's see. Yeah, exactly. Yeah. Yeah, living in the EU, I have to say, is pretty huge for trading. I mean, I don't trade the London session because there are so many better moves during New York, and I follow all the markets, so I gotta have a life too, right? So, but here, starting New York at typically 1:30 in the afternoon, like I do for pre-market, 7:30 a.m. Eastern. It's a great time zone, just fantastic. I suppose, I don't know, maybe at some point, my parents are in Arizona now. They were in, you know, I grew up in LA, so, but they sold the house last year, so they're in Arizona now. But I don't think I'd want to live on the West Coast ever, even though my family's there. But the trading hours would just suck. You know, I'm not one to get up that early. Really wouldn't like that. So Steve, how you doing? You're doing good. You're being patient, right? And you can see these markets, you know, like the advice I'm giving you, and I'm giving you, you know, the advice that I'm giving you is stuff that in the past has cost me a lot of money. You know, you lose on enough pre-Fed days over the course of many years, and you eventually realize, you know what? There are better odds on other days. Just wait until Powell speaks. And then from there, the market sees what he says. It sets the tone. Then you got good trading the days and weeks after. There's no need to force it leading up to the announcement when there's the maximum amount of uncertainty. Yeah, so for FOMC days, it's the same for me as we trade the news, right? So I just lay out I do the intermarket correlation. On FOMC days, I'll focus on bonds and usually the 10-year because it's the thickest. And then I'll just say, okay, well, based on the other asset classes, based on everything I'm seeing, you know, what do I like here? And on the 10-year, I don't have an order right now, you know, because when Powell speaks, it can get pretty nutty. But I'm really interested in these highs right here. Really interested. This is the area I'm going to be keeping a close eye on for shorting. Now, he may come out and go, hey guys, we're going to start lowering rates and, you know, life is beautiful. We're going to keep them low forever. If that happens, then the 10-year is going to go straight through that resistance level. But charts right now say that resistance is very strong here. So that's how we have to head into the announcement. And then generally speaking, the best advice I can give to most people is don't trade while he's speaking. Wait till he's done. Because while he's speaking, I mean, it's crazy. I usually will wait, like, I'll show you. In this case, I just don't know if we're going to get, I don't know if I'll wait this time just because we're getting such clear indications from metals that bonds are probably going to drop. I don't know if I'll listen to him speak. I might listen to him speak. I read between the lines pretty well. So what we can see here, you know, I don't have an order, but I'm going to be keeping a very close eye on it. You can see I've got the 10-year here, and with the 10-year, you know, I can put on 2 contracts to start, because 2 contracts will make it, you know, $31.25 a tick, because this is half the size of the Ultra Bond. So if you want to have the same kind of size, you got to put on 2 or even 3 contracts, because it just doesn't move as much. On a normal trade, if I was going to go 1 Ultra Bond contract, I would go 3 10 years. But in this case, because it's the Fed and it can be more volatile, I'm going to go 2 10 years instead of 3. And the approach that I'm taking actually for the challenges, I've sort of kind of thought through that. Probably on some of them, you know, if they, oh, by the way, Steve, I did research. It is the Apex accounts, they were only if you had passed up until that day. So now anything you bought during that day is still on the 7 days to pass thing, which is fine. It's not a big deal. So I've just got it set up now to where I'm just going to put on, I've got the copy trader on Quant Tower. I'm just going to put the trade on the one account that you guys see here, and then it's going to funnel across 10 accounts. So if we go, you know, we're basically on 10 50K accounts with each trade that we take. That's what I did this morning when I was testing out. That's why I took that trade on ES this morning. And I don't know, did you see that? Yeah, no worries. Yeah, it's hard to follow their rules. They're always changing too, but I just read through the fine print. I don't know if you saw this earlier. So this morning I just took I was testing the copy trader. I still feel like shit, but I started to feel a little better. Anyway, so the copy trader seemed to work nicely. I made, you know, 160 across all the accounts just on ES. So that's how I'm going to handle this. And that one account that, and sometimes I'll put on a big trade. Like if they have that 1 day to pass thing, yeah, then I might, if I'm close to the goal on 1 or 2 of these, you know, I don't know. We'll see. It's kind of, I'm still learning the actual prop strategy, because OMA obviously works very well. The question is how to get the most out of the props. Yeah, thanks. It was actually on the ES. Okay, Powell's speaking now, so 1:30. We'll keep an eye on this. But on the ES, I was actually looking for a certain level to hold. There was a lot of support there, so I was like, I'll just buy here, and if it really starts to push higher, I'll get a good winner. But I could see immediately as I was in, I was already up like a couple of points, and I was like, this doesn't look right. So I just cut it and took the profit and ran. And sure enough, it ended up going lower, so it would have been a loss. So I think that's one of the things I try to be good about, is that if you pick the right levels, even when you're quote unquote wrong, you can still get out with minimal damage most of the time. Like the most damage I had on this channel was that one, you know, $675 loss on crude oil. And that was because I just didn't pick the right level on that trade. And that's very rare. I think I'm going to chalk that up to just still figuring out streaming. That wasn't really my type of personality, pick a level that poorly. But you can see since then, when we pick our levels, generally, like right now with the 10-year, if we were to go short up here, I doubt it would just rifle straight through the level. I mean, anything's possible, but I don't think it would. The level I like the most is the line in the sand level here is right around here. I would do like 117, which would be great, because if you set the short up in here, you know, that's, if they take out some stops here and goose it a couple more ticks and then fill you, you're either going to get filled and it's going to be the high, or it's, you know, it's going to fill you, back off a little, not drop the way it should, and then you just get out, right? Or it fills you, it's correct, it starts dropping and you're in a good position, right? So that's how I like to pick the levels. How close are you, Steve? How many accounts do you have now? Because what's nice about the Quant Tower is now I'm just managing 1 DOM, but I'm trading 10 Apex accounts. I mean, that's pretty cool. I like that. You're working 5? Okay, cool. And where are you on those? Are you trading them individually, or are you trading them together? Let's see what Powell's statement said. Let's see. Maybe watch some Powell here. Oh, he hasn't even started yet. He's late. Can you hear me and the music that we're waiting for, Steve? I've got it picking up desktop audio and me. Mute him until he starts speaking. But that's cool. We'll listen to him together. I'm glad you can hear it. It's kind of good. Oh, here it comes. I'll let you know. Oh, individually is nice. Same levels as on Sunday. Okay. I think the challenges just generally need to be thought of in terms of risk, reward, and probabilities the way you would think of trading. You just have to run the numbers and think like, okay, if I do 10 at a time, which is what I'll start with. If it starts working, I'll do 20, obviously. But if I do 10 at a time, let's say I do 10 times 10 accounts, you know, and you get that 80% off type situation. Then out of those 10 times 10 accounts, I guess the question is, how many of those are you going to get to pay out? How many payouts are you going to get and keep? I guess you won't really know those stats until you pay out and see. We'll get our first payouts, I guess, at the end of this month or however long it takes, and start together some statistics, and then we'll see what makes the most sense moving forward with challenges. I mean, I think just getting 10 payouts for 2K twice a month, you know, that's 20K twice a month, 40K. That wouldn't be bad for, you know, starting off with the Apex. Kind of keeping the goal small while I start, and then increase it from there once I understand the challenges better. Boring old school trading, boring real money, where trading is just, you know, just trading futures. Now, like, challenge you. I have strategies that work obviously very well, but then, you know, once you start trading the prop firms, that's just a strategy in and of itself to think through how to best apply your strategies to the prop firm rules and get the most out of it. All right, we're gonna listen to Powell here, guys. I'm gonna, as soon as he comes on. Right now, they have the pre-market. Yeah, they're doing some commercials. You can see here. We're not going to watch Powell because I want to see the charts. But you can see, we'll be able to listen to him together. I'll unmute it once he comes on, which is hopefully in a second. I mean, this fucking guy thinks we got all day to sit here. I mean, supposed to start at 1:30. Oops, I didn't mean to use the Lord's name in vain for all of our Mormon friends out there. How do the Mormons feel, Steve, about when people use, like if I say, oh, Jesus, is that like not good in the Church of Latter-day Saints? Or are you guys more forgiving when it comes to those types of things? Let's see. There are more rules once you have a funded account. Oh, right. So when you have a funded account, are you allowed to trade the news? Like, how does it work when he's speaking? We should look at that so we know, because we got to start understanding this stuff. I'm going to read. So we're waiting for Powell. I'm going to type in X trader funding a account rule. They call. Let's just, when Powell comes on, we'll listen to him. Can you check, Steve? Is he on my FOMC thing? Powell's not speaking yet. Is that true for you guys? Can you go check yours? Or is he speaking and I'm watching something wrong? But this says FOMC press conference live January 31st. So this should be it. But I'm shocked that he's this late. Let's check. Looking at the rules here for that PA account. So the trailing drawdown is different on a good. Contracts are the same. Trade during the news. Your normal trading strategy. We do not allow news trading strategies. News trades of any kind. These are prohibited. Straddles, strangles, or any type of news trading is prohibited. Okay, but that's straddles. But what about just you want to go short, like because you can't be both long and short. Fine, any of that crap. So it doesn't really. By the way, Steve, did you check? Is Powell not speaking? I'll try another YouTube channel. Sure doesn't look like he's speaking. Here's CNBC gonna cover him. I mean, I'm on the FOMC channel, so it's got to be here where he's going to be speaking. I think he's just late, you guys. Look, I think Powell's in the bathroom. Got diarrhea before the speech. He's very nervous. It's unbelievable. So he's supposed to start at 2:30. Oh, am I early? Sorry, I'm way early. It's my mistake. I was thinking right now this is how sick I am and tired. Right now in my head the whole time it's been 2:40 p.m. Eastern. Of course, it's only 1:40 p.m. Eastern. It's my bad. This is how tired I am. Okay. So we have a lot of time to prepare. Too much time. So yeah, on the funded account, Steve, it doesn't look like they say no news trading strategies, but it looks like what they mean is straddles. It doesn't look like you lose your account if you just go, one direction on a news trade. And I mean, there's some other people I see out there on YouTube. They trade the open and stuff. So I think as long as you're not doing straddles and stuff, you're allowed to do whatever you want to do. All right, so this is what we're waiting for. Yeah, that's why. Okay, let's take a 15-minute break, Steve, because we've prepared everything. I got here way too early. My timing was off. So now we got to kill some time. All right, I'm back. Did I miss anything, Steve? Hey guys, sometimes you get some news when the announcement, even though they're going to leave rates unchanged, still sometimes get some movement. So that'll come out here in just a few seconds. The rate itself. Again, we're looking to short. Probably want to see if this level up here gets tested on the 10-year. 112, 15, 16, somewhere up here. There's a lot of resistance. Want to look to short. There you can see a lot of, you see there's some serious movement. As his speech gets released, the prepared remarks. You can see the idea we had was correct so far. We wouldn't have got filled anyways, right? Because I would have had my order up in here. But see, those are the ideas that I plan out. But see, it's crazy. Like, imagine just the insider information on that speech gets released, and then whoever has information on that, the key words there, they get to act first. Yeah. Ultra bonds are doing. So back up. Yes. Checking the other markets because probably that's kind of what I expected so far. I said I think he's going to come out hawkish because that's what all the charts were telling us, and so far the markets are reacting that way. That's for sure. But that's just for now. You know, thing moves a lot. But we have broken some key support levels now on ES, so it's looking pretty hawkish, which is cool because that would, I think, be a surprise to the market if he comes out hawkish, which could give some decent trading set. NASDAQ. Seeing if we had any nice patterns coming in the NASDAQ. Definitely, yeah. Looking like stocks are going to head lower. So this is, you see how we, yeah, it could be. Let's see where ES, well, now ES is dropping. I mean, I plan the trade, so I'm just, you know, I'm looking for very specific levels. I'm not necessarily trading like the reaction. I just think that's a more dangerous way to trade. But you can see the good news is, see, heading into the news announcement, right, Steve? Looking at all the charts, I said, look, I don't know what it's going to be, but it's looking like things are going to be hawkish. And boom, here you go. That's because all the charts were saying that. So, it's too bad we didn't push a little higher up there, because that's kind of the area I was interested in shorting, and I just didn't get there. But that's kind of the move I was looking for, like that. I bet you gold is just getting hammered. Oh yeah, look at gold. Wow. I mean, any of these that pop into the press conference. Silver's wild today, huh? A lot of resistance up there, and 23.21 on silver. I don't know if I would take it. I always wait. I don't go intra bar here. You can just get chewed up and spit out if you start jumping in and out. Better to wait. Did you really get filled, Steve? Good job, my man. That makes me so happy. Did you take profit down here? I would probably pull some profit down here, but you know, because you got quite a bit of support, and when he speaks, stuff can stuff can change around. So do what you want, but I would. That's a nice move right there already. Well, you're down into a pretty good level now. You take some profit. I got to go see what my child is doing. I'll be right back. She's throwing a fit. Steve, you're better at you. you. I'm always, looking for the perfect level. You're like, oh, Andy feels really good about shorting. You just nail my picks. Good job. Next time, tell me where you're putting the level. I'll probably put mine where you put yours. But yeah, there's a lot of support you see on the 4 hour down there around 4 extension, the pocket. You got 3 extensions here. So I would try and get out around 4. Look, I don't want you to miss out on a big winner if that's what you're, looking for. Do what you want. That was a great pick. That's good, Steve. If I don't end up taking a trade today, I'll do a video for the channel. I did the... All right, are we back? My internet's going in and out. I don't know why. Whatever. Probably just a lot of people on the network watching movies. I don't usually stream at this time. Nice. 232 is good. Way to go. Be right back. I got to discipline my child. Oh man, when they're 4 years old, they just don't listen, Steve, do they? Nice, that was a good call. Anyways, I think my internet's back. I'm not. Heck. You hear me? Okay, good. So see NASDAQ's kind of recovering a little bit. That's why it's good to just take your profit on those, because they can be all over the map. You got your money on the initial reaction, which was great. That's kind of what I was telling you, to take profit down there, because you have a lot of support there. So I think you got out at a good spot. Good trade, Steve. Proud of you. Gold. Yeah, see, they're all kind of, this is kind of what happens, you know? And then oftentimes what'll happen is, like, you know, let's say gold comes back and closes up here, you know, that'll set up the short, or even bonds again, right? Like bonds might recover and give us a good look. At the ultras are back up here, so the ultra might come all the way back up here and set up a short. You just don't know. I suppose what I got to do too, I learned from that. I'm tired, but normally I would have, you know, there were a couple orders I could have been looking at on the long side too. Like on bonds, I could have definitely set an order down there around 20, because you got so much support down there. I don't think I haven't been this tired in a long time. I'm really struggling. There were some decent trades this morning, actually. I think it would have been a good day for us, but I don't regret it, because I couldn't have traded anyways. I was just too. I got to get better. I got to get over this thing. We're gonna. Yeah, they kept the same, but we'll see the information in the statement, which way they're leaning, and then also his press conference. This would have been a good short today on copper for sure. 2-bar push, 4-hour exhaust, because stocks were already, you know, making new lows on the day. So that was a really good divergent short there on copper when stocks were making new lows. Those are the types of trades you see. Just do this every day and you get the good ones. It would have been a good one today on copper. We'll get a lot more progress going when I'm feeling better. I haven't been this sick in 4 years. Like my first time I've been sick in 4 years. And naturally it has to happen right when you start streaming and doing stuff. That's kind of the way. It'd be nice to get over this, have some energy, and yeah, UB's got a lot of resistance up there for sure. I'd be interested. Yeah, crude's getting smoked. Yeah, I mean, there's a lot of resistance up there on UB. I don't know if it'll get up there, but we'll see. You know, sometimes when Powell, the good news is these levels are now in. So when he starts speaking, Quant Tower is not working. So Rhythmic appears. Is your Rhythmic down or whatever you're using for Apex? Because my Quant Tower is not showing any data unless I have to read. That's the only problem with these firms. You know, their data kind of goes out at suspicious times sometimes. Read a lot of reviews where people are on their way to big payouts and something happens. And that makes sense. You know, the prop firms, I have no doubt that they play games and write things into their code. You can write anything. Okay, I'm gonna have to close Quant Tower. You open it. Yours is working. Okay. Mine's not. Let's open. Break thing. Okay, I appear to be back online with Quant Tower reading for now. Yeah, so hopefully with Powell speaking, I'd like to nail ultra bonds maybe up around 129.29, 129.30 like you said. Kind of one of those things while he's speaking. If the ultra bonds are a good one, they kind of really move around, you know, a lot while he's speaking. Yeah, exactly. You heard the chime. That was the Quant Tower chime. So, you know, if the ultra bonds were able to, I even think you still have a lot of support at like 128.20 as well down here. So I don't know if I'd buy that because the powerful side is the downside. So looking for shorts. When he speaks, lots of things happen. But anyways, if we can get any one of the bonds, you know, the ultra bonds up there around 129.24 or higher. 30-year up around 122.20. 10-year up around 13.14 again. That's what we'd be looking for. So we had that first short was great there on the 10-year here. Nice short, Steve. Using the analysis perfectly. For those just joining us, the short was at 112.13 there. Steve nailed it. This is how I encourage viewers to use the analysis. You know, I was calling out this resistance level, as you heard, leading into the announcement. I said that I think bonds are going to drop because of what we saw in metals and everything else, and that turned out to be the right call. I was looking to get short up in here, just waiting to see if it got there. I didn't have an order. But Steve, you know, my man, he just said, hey, I'm going to put my order right there at 13. He got lucky, got filled, and boom, took profit down here at 4. So that's the way you can use the announcement. You'll get to take my trades too when I tell you where I'm taking them, but everybody's different. Some people are more aggressive. Steve seems to be using my analysis. You use my analysis, you know, really, really good. If I say an overall area, you tend to be aggressive in your order placement, Steve, which is good. So that was a great trade there on the back of at least the initial statement release at 2 p.m. Eastern. Now we got Powell in 10 minutes. And he'll make this market rock and roll. And when he does that, I'm going to be looking to get short again. Well, I didn't short, but Steve did. I'm going to be looking to get short on the 10-year up here. Or really the one I would like is the ultra bond. If we get a little volatile here during Powell's speech, I would love the ultra to come fish above these highs. Then I would short, you know, because when Powell's speaking, I mean, you can short there. It can drop, you know, from here. This is, you know, 129.28. You can short, you can cover at, 18, that's 10 ticks. It can go back up, you short again. I mean, when Powell's speaking, this thing can just go like this. You can get, sometimes I've had moments like this where if I have my level, I'll literally sit there and just hit the level, take the profit, wait, hit the level, take the profit. It doesn't happen often, but on volatile press conferences, it can happen. And the level is what matters. You want to be confident in your direction, which for me right now is bonds to the downside for all the reasons I laid out. And then once you have your direction and you're on your market, bonds, short bonds, you want the level, the area where you want to transact. And then just let your good buddy Powell put it up to that level with this press conference bullshit. And you short and you cover, and you short and you cover. So, and then sure, if you short and it goes through, you take a small loss, but the win is a lot larger because you're picking the level where it has to hold. Those are the levels that I like to take, the ones where it has to hold. And then on the long side, I mean, the pressure is to the downside. I think if you look at the weekly and the daily charts now, we're going to be rolling over, heading back down on bonds. Rates are going to increase. That's why I think his press conference is going to be more hawkish than people anticipate, because that's what the charts are showing. The indices, if we look at ES here, I mean, we should finally, now this is what we've been waiting for. This is just beautiful. If you look at the weekly ES, this is exactly what we've been talking about. The weekly's rolling over. So now what we're probably going to see the next couple of weeks is you're going to see some continued pressure on stocks, as they correct back down. So going to be some good trading. I mean, there's already been great trading. Well, there's good trading all the time, but the stocks are dropping. That's just nice. I think stocks are so much more fun to trade. I love shorting personally, but of course I'll long too. But you can see here now on ES, guys, this is why I think Powell's going to be so hawkish today. Hawkish meaning he's going to talk about holding rates higher for longer, probably more so than what people are expecting. Because look at the ES here. You're breaking the extension. You're breaking look at all these lows here, you guys. 1, 2, 3, 4. We're already through 2 of them. I mean, we're heading lower here, right? So rallies at this point, when you look at ES, for those of you who want to trade ES, I mean, rallies are going to be sold into now. Like, I would be shocked, especially based on what bonds are doing, what gold is doing, what silver is doing. I would be shocked to see ES, finish back up in here. I don't think that's going to happen. We don't have the price structure, and we don't have the intermarket correlations that are suggesting that. The dollar is getting stronger now against the euro again. We're back below 108.50 on the euro futures. Gold and silver, I think, are putting in their tops here. As we now, here's the gold daily chart. So I think we're going to start rolling over now on gold. So we got some nice clarity here on the charts. You can see the 4-hour chart, hourly chart, gold leaking lower. So you see how this is what tipped me off to shorting bonds heading into the announcement, was because of what we saw with the indices and with gold and silver. So they were already dropping, and you still had the 10-year sitting right up near these highs. So there you go. That's the one you want. That's how we do it. It's not sexy, but it works. That's what we want. All right. So now we just wait for our man to get on the podium and start moving this thing around. I've got 10 accounts connected to that quant tower, so you guys can see them. I don't know where the rhythmic thing is, but anyways, we're going to just try and pass 10 of these and see if we can get 10 payouts for $1,000 a piece eventually. It'd be a good first month, so we'll see. 2 times, because I guess Apex has their rules. You're not able to take out, I don't think you're able to take out unlimited money until the 4th month or something. Even then, I mean, if I was to run up one of these 50K accounts to 150 grand in a month, which I could if I just went absolutely nuts on leverage, followed my trading plan, but just went huge. And you'd have to have a bit of luck too when you're going big size like that, but it's possible. I mean, are they going to pay that out? I guess it's worth. Step number 1, let's get the challenges out of the way. And we do that by just picking good trades like we just did. Got some chamomile tea. I heard a chime. Oh, yeah, the chime. I'm excited to see you trade $500,000. Yeah. Well, we'll see how the challenge thing goes. I mean, I think it'll go pretty good, but even if that doesn't go, I might, to get some buzz for the stream, I might just trade like $1 million in a real account on the stream. How I would feel comfortable showing that and doing that. But it's an option or more, but I gotta. The challenge is a good way, I think, at first to generate buzz because a lot of people are doing that right now. So start with that. And look, I like, you know, I'm very conservative with my money, but I have a challenge where I can go nuts. Like I can tell you, if I got 10 of them over the line to start, I mean, since I can't really, well, no, because you can build, right? So like, yeah, I would probably trade, you know, normal conservative on like 7 of them just to try and get that guaranteed 2K payout times 7 accounts twice a month. You know, that's 14K times 2, 28K. That'd be a good payout. And then on 3 of them, I would try and just be pretty darn aggressive. I'd still take the same trades, but I would, well, the thing, I would go bigger size. And on the challenge, you know, on the PA accounts, of course, we can let our winners run. I mean, psychologically, that's huge to not have to worry about trailing draw. So that's I could see myself like on one day where I'm really dialed in, and because there are days where I just, my charts, the correlations, my experience, my intuition, there are days where I just know that whatever, pick an asset, is going to go from point A to point B. And without that trailing draw problem, you know, just going heavy and pyramiding at strategic pullbacks, I mean, you can run up an account from, you know, 10 grand to, you know, 50, 60, 70 grand in a day if you pick the right spots and just keep adding size. Got to pick the one. That's when you got to jump on board the trend. Now, what'd you find on the Apex sites? Yeah, there's nobody trading, right, Steve? There's you guys. You tell me, because you guys are the, you know, everyone out there's people on YouTube. I mean, is it more fun to watch like 20 funded accounts get traded? I think so, because people can relate to that more, right? So like, because even if I traded a large account on screen, I guess that's kind of fun, but at the same time, it's not really like, you know, relating to anybody. Or so I like the challenge thing, something that everybody can benefit from. So if you have success on a challenge and you show that to people, like, it's relatable and they can have success too. So I kind of like that approach. Definitely like not being sick anymore. Anybody out there have COVID? You guys, is it going around out there in the States? It's going around here. All right, we got Powell coming on in about 30 seconds or something. Yep, 20 seconds. Got Ultra bonds up. We'll flip around between all of them. But really, I like shorting the bonds if we try and push up here somewhere. And again, for Apex, the reason I like to, I'll trade all the markets, but if I have a choice, the trailing draw, the bonds tend to go in one direction once they start going. So it's a good market to trade for that trailing draw rule when you're just trying to get over the challenge thingy. I can find my thing. I'll find it later for you guys. It's fine. Anyways, I got the quant tower hooked up to the 10 accounts here. So. All right, let's put Powell on. Go find man. Guys, we got Powell right here. I'm going to put on the sound for you guys. We're going to all try to not fall asleep with this lovely FOMC music. I mean, I guess we can watch him, you guys. Here, let me just try and, I want to at least see my hourly chart. There we go. How's that? You see that okay? Look at our man Jerome. And Steve, the audio's coming through. Yeah, exactly. No, the $35 resets, it is for all accounts. So in that sense, getting a 300K account and then just going for it and just resetting it, it's not a bad idea.
Good afternoon.
Let's listen to Jerome.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory.
I'll give you guys my comments.
And we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years. And immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
That was pretty hawkish, you guys. I'll give you some comments afterwards.
Smiley from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So in other words, what we care about is the aggregate number, not so much the composition. But we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because, for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Howard.
Hi, thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above. Core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well. The labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down, that's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones.
We don't need to listen to his gobbledygook anymore. Let's go ahead and talk about the charts here. I've got some thoughts on Powell, but that's not going to make us any money. What's going to make us money is seeing how the markets are reacting to what he's talking about. So let me go ahead and turn it off. Boom. Mic check. Coming through loud and clear. Good. Okay. But look, as he's speaking, we're still interested in shorting bonds up here, right? But we need to take a look. If bonds are going to be a good short up here, we want to see, first of all, what are the indices doing? Looking at ES, I said heading into the announcement, you had ES was breaking lower, and we were through quite a lot of support on the daily. So I'll bring that daily up over here. We've now made a substantial turnaround here on ES. So that's a pretty sizable pickup off the lows there for ES. So we got to keep that in mind while we trade the markets in front of us, right? But it could be setting up a short here as well, heading into the 3 o'clock hourly close. We'll just have to wait and see. But stocks are reacting positively. The key to see if we want to short bonds or not is looking at first the 10-year, the 30-year, then we'll look at gold and silver and the dollar. The euro is back to 108.81. So the euro's recovered a lot against the dollar, right? So that's risk on. That's Powell dovish. Here's the 30-year. This is a key level now for the 30-year. If the 30-year, if this hourly here closes above this level at 3 o'clock in about 12 minutes, that's telling us risk on. That tells us you don't want to short bonds, right? We'll keep a very close eye on the 10-year here. Super important. I mean, you've got a lot of resistance here still, so I'm going to be keeping a very, very close eye on this. But looking at gold and silver, at gold, so gold for now is still holding. I mean, a lot of resistance here. This is the key level for gold that needs to hold, that 2068.5. Look at the key level for silver. See, because all these markets are going to respond the same way. Here's silver. And I think then you have to start piecing together different scenarios. If it was sort of, if his press conference is a bit of a, wishy-washy, a little risk on, a little, but not crazy, right? Then you got to find the asset there in between that you'd want to maybe trade. Silver could potentially be a good. Keep an eye on that. Copper, I think, was a good short earlier. Let's look at platinum. We're going to make our decision now, as usual, based on the 3 p.m. Hourly close. Platinum, don't really see anything. So I think out of everything I'm seeing here, you see stocks are, ES is back down to 49.13, 49.14. So we're going to get a lot in 49.10, 49.11. So Powell has said something now that's spooking everything again. We're going to get a lot of information when these things close. You can see this is why you got to just use vigilance and wait for the setup. So here's the NASDAQ. you got these outside bars, so you got to be careful with these outside bars. Look at the 10-year again. The 10-year seems to be kind of pushing here. Look at the bond. The long end of the curve is heading, I think long end of the curve here looks to be my my favorite potential for, especially gold and silver. I think bonds would be a better short than gold and silver because the dollar is not as strong against the euro, which you want to short metals when the dollar is gaining against the euro. Right now, the dollar is not gaining against the euro. Let's look. I think the top pick for 3 o'clock is going to be probably ultra bonds, depending on where it closes here. Like to get it up in here somewhere. See, and then it'll be based on, if ultra bonds push up here and gold and silver stay below their key levels and stocks stay under pressure, then we'd have a really good short on bonds. That's what I'm going to keep an eye on. We got about 8 minutes. I'm just going to restroom real quick and then we'll make our decision. All right, guys, we are looking to short bonds here at the 3 o'clock close. Hopefully ultras can get a little bit of a push. Stocks can kind of stay where they are right now. Really the key, I want to see gold close below 2068-ish. I want to see silver, not get too much higher. I'd like to see the dollar claw back a little against the euro, but it's not that necessary. Overall, I think it's a good short up in here on the bonds, but I'd like to see it. It really depends where it closes, guys. A lot can happen. If we were to close down in here, I wouldn't short it because we're heading into a lot of support down here. So I would want to short where the resistance is here. Look to cover down in here. Let's see what the 10-year is doing. The bonds were a good play before. Great trade by Steve there on the 10-year. Yeah, so the 10-year is kind of setting up. I think the long end of the curve is going to be a better potential. 30-year, the ultra. The 30-year is up here nicely. The ultra is going to move a lot cleaner than the 30-year. That's why I prefer it if I'm going to put on a bonds trade. the ultra the best. Kind of up here is where I'd be interested in. You can see the ultra so far is the weakest. All right, we've got about 4 minutes to go here. So look at gold one more time. Gold has a lot of resistance up in here. Gold's not a bad short up in here. Gold could be interesting, something like this. Pops, slam back down. Gold looks decent as well. Look at silver. These are all going to be correlated, guys. So what I'm trying to do is find the one that I think, you know, might be. The dollar, yeah, 108.70. I'd like to see it down below 50 for the metals. That's when you get a really good metals trade. Looking like the market's kind of interpreting Powell's press conference as a little bit mixed for right now. Got 3 minutes here. Look at ES and Q. 9 o'clock at night here in Sweden, guys. 6, so I'm just kind of low energy, but do my best to pull us all through and see if we can make some money. Go to bed. Okay, you see this is we're not getting any read here from stocks at all. Because I want to put on the trade when I'm really getting a clear read across the different asset classes. I'm not saying we're not going to take it. I'm just telling you. I mean, this looks like a pretty decent little. There's a lot of resistance there on the NASDAQ. Look at the 10-year. Gold. Gold is the weakest. I'd like to see a stronger dollar. But is Quant Tower going to not load my... As I can't load, this is the thing about these challenges, right? Like, I want to short gold, I can see it. It's like the challenges can probably see too many people are shorting gold, so it's like, get into gold? No, sorry, no gold for you right now, my friend. I don't know, I'm gonna have to figure out these damn challenges. I'll go back to ultra bonds. This was my hesitation. Challenges, but that's fine, I'll learn. So gold is, I liked gold up there about 2067. See what ultra bonds are doing here. I'm not going to put on a trade here. I'm going to keep an eye on ultra bonds. You got a lot of resistance up here at around 18, but I'm going to see, because you said, well, why don't you short here? Well, these are $31.25 a tick, right? So I know my stop needs to be behind these highs. So 129.5 all the way to 129.18, right? That's 13 ticks times $31 a tick. Now that skews the risk to reward, right? Doesn't make it favorable. So you might take a trade. Let's scroll through here and look. Yes. Yeah, ES got a pretty weak close. That's good. Yeah, I'll look at your comments in just a second. Yeah, exactly. Hit the 4-hour extension perfectly. That's OMA for you, Steve. It's nice, isn't it? So that's a messy pattern on the NASDAQ. Outside bar closing inside the range. That's called a who the hell knows pattern. So if you want to gamble and try and get lucky, trade the NASDAQ. I think bonds are looking much more clear. The 10 years, this looks a little better. But I would prefer to short it up in here somewhere. Go back and look. Gold. I don't know why. I don't know why. The gold, I think, is going to continue to collapse. Probably back down to 2056. But I'm not shorting gold down here, guys, for the same reason I'm not shorting ultra bonds. Is because for gold, my stop needs to be back here. I'm just waiting to see if something pops back up, bonds or gold, and then I'll pick it. And you say, well, why don't I set an order? I'm not setting an order because I don't know what market I'm going to throw on the trades across all 10 accounts. I need to be able to act quickly. Nice. Steve killing it. Got short again on the 10-year. Good job, Steve. Here's silver. That's kind of what I anticipated with silver. Back and the bonds are dropping now. Nice. Now the dollar's getting a little stronger. Yeah. So it was hawkish overall. How the market's interpreting it. Now, gold's starting to rifle. Yeah. So if you guys are aggressive and you want to start scalping or jumping in and out or whatever, if that's your style, looks like that was a hawkish conference. Dollar's getting stronger, metals are dropping, bonds are dropping, rates are rising. I'm waiting, just kind of trader I am. I'm just waiting for a level that I might not get, but that's me. You guys can be aggressive. Yeah, that was a great short, Steve. You're using the concepts from the course very, very well. After just a couple of weeks, I'm very impressed. And I'm proud of you. You're really doing very well. So here's ES, yeah, tanking nicely. I'm just looking for a market that's potentially out of place. There's platinum. See how Bitcoin and Ethereum are reacting to this. Look at Bitcoin. Nice exhaust on the 4-hour there for Bitcoin. Getting lower. Look at Ethereum. Just seeing if I can find anything that's still kind of sitting up higher where it shouldn't be. Oh wow, guys, look at this is the kicker right here. Look at the dollar here. 108.23. We were just at 108.70. 50 pips, just boom. So that's why gold and silver are going to continue to tank hard. Wow. Bummer that Quant Tower wouldn't let me in on gold. So I got to figure that out. There's silver. So you can see how we use the asset correlations, all the different markets, Owings market analysis. I mean, we're pretty much on the right side of things, you know, way more often than not. And when you do that, you just keep waiting for the good ones to set up and keep taking them and rinse and repeat. So now the question I have to make is, do I want to pull out a 15-minute chart? I might have to, because I don't think we're coming back on any of these hourlies. Here's the 15, you guys. Put the 4-hour over. It's looking like we've got some good. If one of these pulls back on the 15-minute chart, we could have a pretty good. And look, some of you guys are good momentum traders. You don't mind just jumping into a market that's moving. That's great. That's just not the way I do it. If I've got the energy, sometimes I will. You know, if it's the New York Open and I'm fresh and I can think, sure. But right now, sick, COVID, pink eye, 9 o'clock at night, tired, and just, I know this. See, when I'm tired and sick, just, okay, I'm waiting for the easier trade because I don't have the capacity to manage a fuck up. And it's better just not to make it in the first place. Yeah, Steve, you're doing great. Here's NASDAQ. I think, look, with the dollar getting strong like this, you guys, the easy money is gold, silver. Bonds are going to keep tanking as well. But I think, you know, gold and silver for sure. Silver breaking back down through that 22.98 level. Got a lot of resistance now on silver. Oh, yeah. I might try and get short silver up into 23.05 maybe. Yeah, I'm going to set an order to short silver at like 23.06. I don't know if it's going to. Hey, let's see if Quant Tower, you know, extends me the good graces of allowing me to put on my fucking trade. Look at this, guys. SIH4. It's like, see, this is Apex Trader funding, Quant Tower. This is the kind of shit you deal with a funded fucking account. Look at this. So I can go to Ultra Bonds, no problem. Great. I can go to the indices. But when I want to do gold and silver, which I bet you people are shorting the fuck out of right now, and they're probably getting hammered, they just make it so you can't access it. That's the only explanation. Because look, I can't get in. I can't short silver. Here's SI. Look. Yes, I would like SI, please. Anybody got any advice? No symbols found on Rhythmic. Well, that's funny because that is the correct. Certainly haven't rolled over. Yeah, I know. I can't. Quant Tower won't let me in. He's just like, oh, Andy's gonna fucking clean out Apex right now, so can't really get let in. Dude. Okay, so there's COMEX. There's futures. There's silver. Calendar spreads? No, I don't really want calendar spreads. Do I want options? No, I don't want options. I want a March contract for silver. Wow, this is funny, you guys. And they wouldn't let me on gold either. CJ. That's the April contract for gold. See if they'll let me in on platinum, you guys. Probably because it's not as much of a traded market. No symbols found. I need to put .comex. Well, now you guys get to see why I trade my own account and not these gay challenges. Although the challenge is going well, which is probably why I can't get in here. Try QI. What's QI? Definitely. But look, we're gonna keep analyzing, updating them. You have my analysis. Go make money if you're fucking broken. Challenge company. I'll look at the Apex symbol page, which I know it's. I've gone in on silver here before. I know it's the right symbol, and I know that they're playing games because they're probably off sides right now, and a lot of people are probably making money, and so. Oh, sorry, no, I don't know. There was some kind of data thing. It was really weird. It was like right when everybody was making a lot of money. It just, I don't know. Guys, don't think that shit like that doesn't happen. That's like, it's like when if you go into a casino and you start counting cards, they're going to kick you out. It's the same thing here. So yeah, SI is the contract here, guys. Have you seen what I'm seeing? SIGC. Obviously, it's the fucking contract. You know? You can see Trade of 8 Ninja Trader. Okay, so let's go to Rhythmic. It'd be the same. Instruments you can trade on Trade of 8. Scroll down, you can trade on Trade of 8 Ninja Trader. Oh, Rhythmic. Here's Rhythmic. Yeah, of course. Obviously. SI. Can't get in. At least we have it recorded for the stream. Look, it's the same, UBH4, right? That is Ultra Bond March 2024, right? So it's the same. If I want to go ESH4, that's, S&P 500 E-mini March. Well, ESH4, it worked, 10 seconds ago. So NQH4. All right, so they must be having problems. I'm not able to get in on. Well, if you're able to short, guys, silver up above 23 anywhere, I think. A gift from God. I'm trying to accept that gift from God, except for. Well, I'm going to X out of Font Tower. And then you open it. But this is okay. I'm just doing the challenges because I thought, oh, well, this is an easy way to make money. But I figured they'd be playing games like this. They are. Right now, so I got to debate how long I'm going to do this because right now I'd be making money on my own account. But because of this kind of bullshit, I'm here fucking around with this. So let's see. Let's see if they bless us with the good graces to put on the trade we would like to put on. Well, guys, it's a good lesson in staying calm under pressure. When the market pisses you off, there's just not a whole lot you can do. Oh, there's silver. See, I was right the whole time. It just they play games, and I wanted to get. I was waiting to get short up there around 23:05. Let's look at the 5 minutes. See if I fucking. Guys, I don't usually swear, but it's late. I'm sick, and this is just the last time. Not the right time for them to be fucking around. Let's look at the 5 minute chart. Okay, good. Oh, we're back up there. Nice. This is what I want. I'm gonna wait for this. So kind of in here is where I'm interested. Dollars 0834. So basically, it would be right here on silver 2308. I'm trying to get short at 08, you guys. We're going to get short 06. My mental stop is right around 09, 09 and a half, so I'm not risking a whole lot. It may not get up there. Tried. We see it tried. Filled. It's got to kind of hold here, or I'm not going to be a fan of it. This is the level. I'd like to see some selling come in now. There we go. Let's see that selling come in. Come on. I want to see it pick up like that. Yeah, it's not what I want to see right there. Come on. Silver is one of these markets, guys. It'll fucking piss you off. It'll just fuck with you until the last minute, and then you'll just get out, and then it'll just drop. Come on, you fucker. They're gonna break even there, you guys. I think it's gonna drop, but it'll probably drop now. You guys will see how silver is, but it's just kind of sitting here pissing me off a little too much. I think break even is a prudent play there, which is why I got out of break even. So let's see what happens. I still like the short. The dollar still strong. Gold's kind of rebounding a little bit off the lows. I just have a feeling, if you ask why did I cut that, is because right now I'm just seeing it may want to squeeze a little higher first. So if it squeezes up here, this is where I'd like to get it. It may not. I may miss it. It may just drop without me right now. But when I see a trade, if it doesn't start to work pretty quickly, I just get out, and that's how I manage my risk. And sometimes, like now, it'll probably drop, and it's like you don't get the benefit of the winner. But on these challenges, I'm trying to trade the risk, manage it very high. Now it'll go. This is what silver does, you guys. And I'm very tired. You know what I got to do is I got to set the stop. That's why too, because I don't want to have to do it manually. So I got to set the stop loss here on this quant. I'm getting used to this quant tower, guys. It's not like something I'm. I think it's a good trade overall. Probably going to go down now. I'm just kind of waiting for it to pop a little bit. Take a look at the 15-minute. You can hardly see out my right eye, guys, with the pink eye and the COVID. So you have to bear with me. I need a good night's sleep and pick up tomorrow. Silver's probably going to collapse here. I just don't have the energy to trade very well right now. Let's see. 15-minute chart. Yeah, that was probably the spot right there. It's always tough. I like to get in, when you're up in here and then you catch that initial surge. I still think we're going lower on silver, but it's tough. When you try and jump on here, sometimes it'll push back farther than you think. It's just this time I think it's going to drop, but we'll see if I made the right call or not. But, I'm always paying attention first and foremost to risk. And I'm never worried about like, oh, well, I could have made this or I should have done this. No, I'm always focused on managing the risk. Go ahead and just look at bonds are dropping nicely. Right, and we have that problem with the nice, good job, Steve. Killing it. Yes, you got bonds here. You see, if ZN pushes back, you know, silver might try and push back too. I am so tired. When I'm tired like this too, I know like I just got to go to bed because you don't trade well when you're tired. It's like you wouldn't fly a plane like exhausted, you know. Here's the ultra bond. And sometimes you just need a little luck too. Like that silver, right now it's at 23.03. You know, we shorted it at 23.08 or something. That's nice. That's 5-6 cents. You know, we get 10 cents on silver. It's $500. I just wanted it to kind of drop a little bit, and I had to stay there and fuck around with us a little bit more when I'm tired and COVID, and I just don't need it. Let's see here. These are the ultra bonds. I think the ultra bonds are gonna follow silver. Silver's a wild market, you guys. It's a big contract too. Look at getting very tired. Fair warning. Very, very tired. So that's good. I learned something, you know, about this the challenge stuff with the Apex, and you can't take for granted that you're going to be able to get into the market. Like, let's say you're, you know, 500 away from a passing a challenge, and you wait for a great silver trade, and then boom, it's like you just can't put it on. It's like that. It's going to happen, you guys, and don't let it fuck with your psychology because that's what they want. All right, so here's the ultra bonds. I'm going to bring up the 15. All right, here's the 15, and here is show you how we use the 15 and the 5. This is how I made that $1,800 on ultra bonds the other day. All right. Let's see here. I'll stick around for a little bit, you guys, and just analyze for you. And if I see something, I might trade it. But I know myself when I'm this tired. Like I literally feel like with COVID and the pink eye and not sleeping for a week and a half now, I feel like I've been on a fucking round the world flight for the last 72 hours and haven't slept. That's how tired I'm actually feeling right now. So that's why I'm kind of not trusting my decision making, because I know in this type of environment when I'm this tired, it's better just to not fuck with it. So here you've got on the 5-minute chart for ultra bonds, it's a nice little pullback into resistance here. You got a lot of OMA stuff and you're in the pocket. So basically what I would wait for is to see on the 15-minute here, like I wouldn't expect, look at the 15-minute chart here, right? What type of trading are we in? We're in congestion, right? We got support here. We got resistance here. Well, question is, do I expect the 15-minute chart to exit congestion to the upside? No, I don't. So basically I'd be waiting to look to try and short the upper end, the resistance zone of congestion up in here. Are we going to get there? I don't know. The 5-minute might be stalling out here. So Steve's doing well today. Of course, you're in a good time zone for this. You're still fresh, Steve, right? What time is it there? It's is it like noon for you or something? Good time zone. Yeah, and you're doing well. You're making some today on the analysis, which is awesome. Pretty much make money every day on the analysis. I can't wait to get a good night's sleep and come back tomorrow and hit it hard. So looking at yeah, guys, look, silver's at 22.96. Oh, that's good. That was the right idea. I just kind of fucked it up and didn't have the energy to sit through it. Yeah, thanks. That was a good call on SI. Hopefully you guys took the call on SI. Some of you out there. Like having COVID like this and just feeling so sick, you almost like brain fog. You kind of feel, I mean, not as bad as being drunk, but it feels like that. Like you feel just like go out of it. It's just hard to, I can analyze okay, obviously, as you can see, but putting on the trade and managing it right now, especially at this time of night. ES and NQ are tanking nicely. Let's go ahead. I typically don't trade the closes at all because I just, when I started way back when, and way back then I did journal and check everything. It was very clear to see like, okay, you make money in the morning and then you lose money at the close. And then eventually after a while, when I just kept doing that, I was like, okay, I'm not going to trade the close anymore. And it wasn't because, you know, the system works just as well at the close. It was because for me in my time zone, I'm fucking exhausted and don't want to be trading. So I just make stupid decisions so I can lose and get the fuck away from the computer. It's called self-sabotage. That's why I don't trade the close. But for you guys who, you know, live in the US or a different part of the world where it works for you and you're fresh, that's the most important thing. For me, the New York morning is when I'm the most fresh. And then, you know, the New York afternoon, sometimes I see a good trade and I post it in members area, I'll do that. But typically not really around 3, 4 in the afternoon. That's more 1, 2 p.m. Eastern latest. So Ultra is dropping out of that resistance level a little bit here. Getting the 330 close, you'll get a lot of volatility here. Silver, yeah, so it just kind of didn't happen. It happened, you know, just, you can see I shorted pretty much the top of the retracement there. That was just using basic OMA stuff. That's why I picked that level. And yeah, I should have held on, but this little fuckery in here, I just didn't have the fortitude. The silver, sometimes when you catch it right, it'll just do this. Like, this is a 5-minute chart, right? I was kind of looking for this, right? Like, there's your pullback and just, it'll just go. And then you know, and then you hold, and it's so easy to hang on to silver when it's going like that. But when it starts to just kind of fuck around like that, it's just a little harder to hold on to. Especially on these challenges, you know, you got to be very vigilant because that trailing drawdown thing. Copper. Oh, look at the dollar now. 0822, yeah. Very strong dollar, guys, against the euro. Gold looks like it's ahead. I still, yeah, I think that was the retracement. Look at Ultras dropping nicely now. That was probably the short there on Ultras. Yeah, a lot of good trade, guys. I think I'd be trading very well if I had more energy, but I just don't have the, you know, when you're tired, you know not to trust yourself. You don't trust your decision-making process when you're that tired. So I think I'm going to leave it there, guys. I've given you some good analysis. Hopefully you've made some money. I know Steve did. Hope everybody else did. And I got to rest up. I'm on some medicine. I got to get rid of this goddamn COVID. Oh, sorry, Steve. Didn't mean to say goddamn. I got to get rid of this fucking COVID so I feel better and, you know, can come with 100% strength. I haven't been 100%, guys, in like 2 weeks. So we're still doing just absolutely awesome under this. I could have taken these 2 weeks off just to sleep. I've been that tired, but I think the COVID's dragging on because I've been streaming and crushing and just kicking ass all the way through, which is good. Now I need a good night's sleep, and we'll come back tomorrow morning. We've got the Fed out of the way, so continue to read the charts like we do very clearly, and the good setups will come, and we'll make a lot of money. So, all right, well, come back tomorrow. I'll be on at 7:30 in the morning, and yeah, we'll make some money. Take care, you guys. Thanks for being here. Bye-bye.